Okay, so, you know, that question that's probably on a lot of people's minds right now,
Yeah.
especially here in the UK,
Yeah.
is now the time to jump into the housing market.
To buy.
To buy, or do we wait and risk,
Okay.
you know, prices maybe going even higher?
Right.
You know, thousands of people are asking themselves this question right now.
Yeah, absolutely.
And we've been going through some materials, specifically a presentation,
Okay.
from Authority Ledger
Okay, cool.
that really dives into, you know, what's happened in the UK housing market recently.
Recent history, yeah.
Yeah, and kind of offers up some ideas about where things might be going.
Predictions, yeah. And I think what's really useful about the Authority Ledger analysis is, you know, it's based on what actually happened.
Yeah.
You know, so it's not just speculation.
Right. It's evidence based.
Exactly.
And I think our goal with this deep dive is to unpack, you know, some of those key developments and predictions in a way that will, you know, hopefully give you a clearer sense of what the landscape looks like.
Totally.
You know, without overwhelming you with too much information.
Right. Just trying to cut through the noise.
Yeah.
And try and make sense of it all.
We're not trying to, you know, give you a signal to buy now or wait or anything like that.
Well, not at all.
But to really equip you with a solid understanding of what's going on.
The forces at play.
Yeah, exactly. The forces at play.
Yeah.
So let's take a step back first.
Okay.
And revisit.
Go back in time a little.
Yeah, go back in time a little bit to around the pandemic.
Yeah.
To kind of that unusual period around, you know, 2022.
Yeah, and what's fascinating there is how, you know, those super low borrowing costs during the pandemic really kind of ignited the housing market.
Yeah.
You know, as life started to return to some kind of normal, there was this huge surge in demand.
Yeah.
You know, tons of people wanting to buy. Right. And the supply of homes just wasn't keeping up.
Right.
And that resulted in average UK house prices going up quite a bit. Yeah. Reaching around £273,000.
Yeah. And then things completely flipped, didn't they?
Yeah. They did a complete 180.
Yeah. Interest rates went from
basically zero.
From basically 0.1%.
Which is nothing.
To 5.25.
Yeah. Huge jump.
Huge jump.
It's a lot to swallow.
Yeah. And so suddenly, you know, those dreams of a second property or even
just getting on the ladder.
Just getting on the ladder at all became a lot harder.
Way more challenging.
Yeah, you would naturally assume.
You would think.
That kind of rapid cooling in demand would lead to like a big drop in prices.
That's the logical conclusion. That's what you'd expect.
Yeah.
But what's really interesting is that we only saw a pretty small drop, around 5%.
Yeah.
But here's where it gets really interesting.
Yeah.
The Authority Ledger talks about what they call the silent crash of 2022.
A silent crash.
Yeah.
Okay, so the actual price tags on houses didn't plummet.
Yeah, they didn't fall off a cliff.
Right.
But inflation, you know, the rate at which prices go up, generally.
Cost of everything.
Cost of everything, yeah, that was really high.
Yeah.
Around 10%.
Yeah, so even if your house price stayed the same on paper.
Yeah, the nominal value.
Nominal value, yeah. What it could actually buy.
Yeah, its real value.
Its real value decreased.
Decreased quite significantly.
Yeah.
So when we zoom out and look at the bigger picture.
Yeah.
You know, the headlines weren't shouting about a housing crash.
Right.
But the inflation adjusted prices, you know, the value after taking into account that rise in the cost of living.
Right.
They actually fell by quite a lot.
Yeah.
15% in just 18 months.
Wow.
Which is the biggest drop we've seen since the financial crisis of 2008.
Yeah.
So it was a pretty serious correction that was happening without the drama of huge price drops.
That's a real aha moment.
It is, yeah.
So then moving on to 2024, it felt like the narrative shifted again.
It did.
There were these predictions of another downturn.
Right.
You know, people were talking about a change in government.
Yeah.
New regulations that might affect property.
Right.
And these higher mortgage rates sticking around.
Yeah, longer than people expected.
Yeah. And understandably, that made some investors nervous.
Of course, yeah. It created some uncertainty.
Yeah, and some people even started thinking about selling.
Yeah, absolutely.
So given all those factors, why didn't that crash materialize?
Yeah, that's the question.
Yeah, why didn't that happen?
And what we saw instead was actually quite surprising.
Yeah.
Halifax, a major mortgage lender, reported a 4.8% increase.
Wow.
In UK house prices on average. Yeah. And they reached a new record high of £300,000.
Wow.
So it's really interesting to try and unpack the reasons behind this unexpected resilience.
Yeah. So what were the key factors then that prevented that predicted crash?
Yeah. What stopped it from happening?
Yeah. And even led to prices going up.
Well, the authority ledger points to a few important things.
Okay.
So firstly, that silent crash we were just talking about.
Right.
Because the actual prices on houses hadn't fallen dramatically.
Yeah.
There wasn't widespread negative equity where people owe more on their mortgage than their house is worth. And because market sentiment is such a big factor.
Yeah.
The absence of a perceived crisis really helped prevent a panic.
It makes sense. Yeah. Without those scary headlines about a housing crash, people were probably less likely to make rash decisions.
Absolutely.
Yeah. So what else contributed to this stability?
Okay. Well, secondly, the structure of the UK mortgage market played a crucial role.
Okay.
So a lot of homeowners in the UK are on fixed rate mortgages.
Yeah.
Which means that their monthly payments stayed the same for a set period of time.
Right.
So this gave them time to adjust to the higher interest rate environment before their costs might go up.
Yeah.
And this is actually quite different to some other places, like Sweden, for example.
Yeah.
Where variable rate mortgages are more common.
Right.
And they saw a much faster and bigger fall in property prices when interest rates rose.
So those fixed rate mortgages acted as a kind of shock absorber.
Yeah, they cushioned the blow.
Yeah, okay. So what's another piece of this puzzle?
Well, the third factor is that age-old issue of supply and demand in the UK housing market, which continues to be a huge factor. Yeah. There's a constant shortage of homes.
Yeah.
And we've got a growing population. And rents are going up.
Yeah.
So this imbalance creates a really strong demand from people who want to buy, which helps to keep prices from collapsing.
Right. And the final piece of the puzzle then.
Yeah. Finally, the UK economy as a whole has stayed relatively stable.
Yeah, we haven't.
We haven't had a massive financial crisis.
Yeah.
And unemployment has remained pretty low.
Yeah.
So this means that most people who own homes can still afford their mortgage payments.
Right.
And without loads of people losing their jobs, there hasn't been this huge wave of forced sales that could drive prices down.
Okay, so we've seen a silent correction.
Right.
This unexpected stability. And now we're kind of looking ahead.
Yeah, gazing into the crystal ball.
Yeah, gazing into the crystal ball a little bit.
A little bit.
And I think for you listening, the big question is, what does all this mean for the future?
What's coming next?
Yeah. Are we heading for another boom?
Yeah.
Is there a bus lurking around the corner?
Right. Or is it?
Or something else entirely.
Something else entirely.
Yeah. The authority ledger touches on these different possibilities.
They do. They look at the contrasting arguments.
Yeah.
So on the one hand, we've come through the last few years without a big price crash.
Yeah.
And so the argument is that maybe prices in the UK just aren't as likely to fall dramatically anymore.
Right.
Interest rates might eventually come down.
Yeah.
That supply and demand problem isn't going away.
Right.
And rising rents make owning a home still a really attractive option.
Yeah.
For a lot of people.
But on the other side, there's this concern.
There's this worry
that the market might still be overvalued.
Yeah, that a correction is coming.
A correction could be on the horizon, especially if the economy weakens.
Right, or if unemployment goes up.
Yeah.
Yeah.
So what's the authority ledger's take on all this uncertainty?
Well, they talk about something they call stealth growth.
Stealth growth.
Yeah, for 2025.
What does that mean?
So what's interesting is they're predicting gradual, steady growth.
Okay.
Of around 3 to 4% a year.
Okay.
And that level of growth could potentially keep pace with, or even slightly exceed inflation.
Yeah.
it's also worth mentioning that, a lot of the mainstream forecasts are predicting growth of around 20% by 2029.
Right.
Which averages out to a similar annual rate of about 3.7%.
So stealth growth doesn't sound as exciting.
Yeah, it doesn't grab the headlines.
As these rapid price increases.
Right.
Yeah.
But the authority ledger suggests that it could actually be good news for serious investors.
Why is that?
So this is where the opportunity could lie.
Okay.
Think about it this way.
Yeah.
You put down a 50,000 pound deposit.
Okay.
On a 200,000 pound property, somewhere like Manchester.
Okay.
Even with that modest annual growth of 3% over 5 years, that property would go up in value by 32,000 pounds.
So 32,000 pounds capital growth.
Exactly.
On your initial 50,000 pound investment.
Yeah. That's
a pretty decent return.
It's a pretty significant return.
Yeah.
And that translates to a double-digit annual return on the capital you've invested.
Right.
And that's before you even think about any rental income you might get from the property.
Yeah, so it's not maybe making the news.
Yeah.
But this kind of consistent growth provides a much more...
It's a lot more stable.
Stable environment for investors.
Yeah, exactly.
Yeah, and stable in what sense?
So because you're using a mortgage...
Yeah.
You're benefiting from leverage.
Right.
You're controlling a 200,000 pound asset.
Right.
With a 50,000 pound investment.
Right.
So even small percentage growth.
Yeah.
On the total value.
Yeah.
Can mean really substantial returns.
Right.
On your initial capital.
Mm-hmm.
And you're doing this without the high risk of buying at the top of a boom.
Yeah.
Where prices could fall sharply.
Right.
It's about building wealth steadily.
Right.
Rather than chasing quick gains.
Yeah. And they mentioned this idea of being able to manufacture your own boom.
Yeah.
What does that mean?
So even within a relatively stable national housing market, there are always going to be variations. Region to region, town to town even.
Yeah.
The authority ledger points out that the best performing area in the UK last year saw price growth that was 3 times the national average.
Yeah.
So it really shows how important it is to have that detailed knowledge of local markets.
Right.
And to be able to spot the areas that have got strong potential for growth.
So it's not just about looking at the UK as a whole.
No.
Yeah.
It's about drilling down.
It's about the specifics.
For those specifics,
Yeah.
Choosing the right location at the right time can lead to way better returns than the national average.
So you essentially create your own boom.
Exactly.
Yeah.
Even during a period of stealth growth.
Yeah. Okay. So to summarize the key points.
Yeah.
We saw that silent correction in 2022.
Right.
Followed by this kind of unexpected stability and modest growth in 2024. Looking ahead, the expectation is for this stealth growth.
Yeah.
Steady, maybe not spectacular.
Yeah. Not making headlines.
But potentially rewarding.
Potentially very rewarding.
For investors who understand those benefits of leverage in a stable market.
Yeah, and the importance of location.
And the importance of location. Yeah.
Totally.
And I think maybe the most important takeaway here is
I think so, yeah.
While those national trends give us a useful overview, the real opportunities for maybe higher returns to be found in understanding those very specific dynamics of those local markets.
Yeah.
And really identifying...
Picking the right spots.
Yeah, picking the right spots.
Yeah.
The areas that are poised for strong growth.
Absolutely.
Which kind of leads us to a final thought.
Okay.
For you to consider.
Yeah, a parting thought.
Yeah, a parting thought. Yeah. While those national trends help us understand the bigger picture.
A broad stroke.
Yeah, the broad strokes.
Yeah.
The real key to achieving those significant returns might lie in the detailed knowledge of your local area.
Yeah, absolutely.
And making strategic choices about where to invest.
Right place, right time.
Yeah, what does that right place, right time really mean for you and your individual goals?
For your circumstances.
And your circumstances.
Yeah.
That's definitely something worth exploring.
Worth thinking about.
Yeah.
Definitely.
Yeah.
And don't forget, knowledge is power.
Absolutely.
We hope this deep dive has given you some valuable insights.
Some food for thought.
Some food for thought to help you navigate the UK housing market.